Okay, hello everyone and welcome back. My name is Greg Furman and this is the Vantage Point AI Market Outlook for the week of June the 23rd, 2025. Now, to get started this week, we'll begin where we always do with the US dollar index. Now, I think we're going to see a very choppy, volatile start to the week with everything that's going on between the US, Iran, and Israel. So right now we can see that the dollar was actually already starting to strengthen last week. Now we've got a low end on the Monday bar coming in at about 27.05, and we've been climbing all of this past week. Now we're closing just a hair above the T-cross long, 27.38. You can see that we've closed at 27.40. In my respectful opinion only, I believe the events over the weekend should strengthen the US dollar, but always remember that predominantly the US dollar is strong at the end of the month into the first week of the new month anyway. So this is just simply going to potentially sweeten the pot. But if we see a big move on Monday, which I believe we will, we want to be very cautious. And again, in my respectful opinion, again only, I would not touch anything on Monday and wait till Monday evening or Tuesday till we see how all of this plays out. Now, the predicted differences, the medium-term predicted difference and the long-term predicted difference are breaking above the zero line. The predicted RSI is sitting at 60.1, which is showing momentum. That's what we want to trade here, guys. We don't want to be trading overbought, oversold. We want to be trading momentum. That is the key thing. So the only one that concerns me a little bit here is the neural index is green, but the neural index strength is moving in the opposite direction of what the main price is doing. So that could suggest that maybe the dollar could struggle at the beginning of the week, but either way, by the end of the week, the dollar is likely in the driver's seat. So when we look at the UDN, the dollar Bare Fund, you can see that we've been under pressure this entire week on that. Now, I do have a reverse check mark here on the neural index strength, but there is definitely a medium-term crossover has occurred. But here is the big however that's coming is that with the predicted RSI, we're looking to gauge momentum, not overbought and oversold. Is there downward momentum? And this is saying no, not currently. So to begin the week, I think it'll be a very interesting start for Monday evening and Monday morning trading. But by Tuesday morning, I believe the smoke will clear and we'll have some idea what's happening. So again, always remember that dollar cycle at the end of the month, that's when there's real dollar demand for the currency. So again, we'll monitor things, but be cautious. Now, with gold contracts here using XAUUSD, right now we're hovering right on that T-cross long, 33.58. I believe we're on our way to the monthly opening price at 32.89. And again, one of the reasons I'll say that, even with everything that's happening between the US and Iran, gold usually weakens at the end of the month. So in this particular case, it may not. But the predicted differences are pointing down, the predicted RSI pointing down also, but we need to break down below the 40 level on the predicted RSI to say, look, we've got momentum building here. Certainly it would be an easy argument for me to make that gold is going to go up next week because of what's happening with the US and Iran. But in actual fact here, guys, it doesn't always work that way. So just because there's a major risk-off scenario, that doesn't necessarily mean it will automatically go into gold for the entire week. So again, we'll monitor this closely, but the monthly opening price is at 32.89. That would be a natural retracement point at month end anyway. And as you can see on a monthly basis here, that the gold contracts have done fairly well for the month, but we are running in a rather tight channel here for an extended period. Now, with the equities going into next week, obviously there's going to be a lot of volatility at the open tonight on Sunday night. So the argument that I made last week is, first and foremost, last week, the previous week, we were not up 3.5 or 3.25%. As I said in the video last week, we're up a mere 1.25%, and we're not holding on to that. We're down again this past week. So the critical level here on the SPYs will be the calendar yearly opening price. That's at 589.39. I believe, if nothing else, we will definitely breach that area unless something dramatically changes by Tuesday or Wednesday, which is possible, I guess, because again, at least for now, the U.S. is not demanding a regime change. It's just so again, we'll see how this one plays out. But regardless of all this, right now, the SPYs have been struggling at these levels for an extended period. I had showed previously in last week's presentation and warned everybody that last time we cleared the calendar yearly opening price, it was very short-lived, and this time we're making much lower highs also. So again, never say never here. But the position of that predicted RSI is saying momentum is building to the downside. That is what it's saying. So good or bad, right, wrong, or indifferent, it is warning us before the events of this weekend that it's already struggling, and we can see that in the chart. So I think we will still definitely look for buying opportunities once we get past this. And there could be a risk-on relief rally by the latter part of the week. So again, keep an eye out for that. But for now, it's definitely warning us that the downside is going to be pressured. Now, Bitcoin this previous week also struggling, as I had mentioned on several of these outlooks, that the primary demand for Bitcoin appears to be between late August, mid-September into about mid-October, early November. So we're not going anywhere up here. The verified zones, have identified multiple failure points up here. I still very much like Bitcoin longs, but closer to September. I think we're going to be moving lower this week. If the stocks really get hammered lower, then I can tell you that Bitcoin is likely going to follow those. And the winner of this battle between Bitcoin and gold likely would go to gold. So we'll see how it plays out. But the only indicator here that's warning that the downside, there may not be any downside, is the MA diff cross. You can see this pink line starting to turn back up. That's a warning sign. So again, we'll monitor things closely, but your upside resistance on Bitcoin, the T-cross long, that's going to be 105,345, and the long predicted at 104,414. That's where all of your resistance is for next week, guys. And there is definitely a short bias here. We do have momentum building on the predicted RSI. The neural index and the neural index strength below the zero line. And we're also below the long predicted in the T-cross long. So a bearish picture has been painted here. Now with oil prices, now this one is where it's going to get very, very interesting going into next week. We've cleared the yearly opening price, and I think that the bulk of the market will automatically assume that oil is going to go through the roof here because of what's going on. Again, with the U.S. and Iran and Israel, but in actual fact, that may not be the case, because I think that, if anything, the U.S. may try and control oil prices so the Middle East can't get that oil money to fund terrorism and everything else. So we'll see how this goes, but the further we move away from the Vantage Point T-cross long at 75.13, the less attractive this oil trade is to me. I need a significant retracement lower to either the yearly opening price or the T-cross long, and the VP indicators are warning. We've got our medium-term strength is below our long-term strength. That is a bearish setup. Now, it doesn't mean a complete trend reversal, but it warns us that there may be limited upside here. So let me give you a scenario of what I think will happen here. Is you will have a big spike in oil on Sunday night or early Monday trade in Asia that will continue into the North American session. And then on Tuesday, you could see a complete and utter reversal in oil back to the downside. That's what I suspect will happen, because I've seen this week after week after week. A big major announcement on a Monday only to be completely reverse whatever the market has done on Tuesday. So be careful of that. There will be trouble there. Now, using the ProShares VIX ETF to gauge that, you can see that the monthly opening price has been containing, the current monthly opening price has been containing the short-term VIX futures via the ETF, the VIXY. So price remains elevated, actually above the calendar yearly opening price, 44.21. So when we look at this right now, this past week, the VIX ETF has actually done fairly well. Now, when we bring in our core VP indicators, the medium and long-term predicted differences are saying that there's upside potential here. And again, they were saying this on the Friday night update before the US bombed Iran. So again, the AI is already picking up on something odd was going on here. And Trump was clear. He said, nope, not doing anything for 2 weeks. Well, we know now that that was a setup to distract the Iranian military forces. So again, I believe the VIX can push through, the VIXY, excuse me, can push through 53.15 and likely will on Monday. But can it hold above that? So that current monthly opening price is key, but the calendar yearly opening price, unless we get below 44.21, then longs are heavily favored. Now, it wouldn't be an outlook without advising my good friends in Germany here. Now, the euro under a little bit of pressure, and I'll talk about that first out of the main forex groups. But right now, a lot of the markets are responding to the risk off. So the DAX 30 really has done extremely well this year compared to the NASDAQ, the S&P, and the Dow. So what I would like to see it do is get back up above the T-cross long at 43.86. But it will be a very difficult week globally for the indices to do that. So keep an eye on that. But to identify our key levels right now, the monthly opening price at 44.02, that's a critical level, very critical level. But the T-cross long at 43.86 and the long predicted at 43.67, these are the two levels we need to get back up above immediately, or it is very likely we are going to return to the current quarterly opening. And again, we always want to make sure we're measuring the first quarter, second quarter, third quarter, fourth quarter, not commingling months. So again, if we break down below that, you can see that we don't have very much support until the low, which is 41.90. If things go the way I think they will next week, 41.90 is likely in the cards. Now, when we look at the Euro US, we've come down, had a retracement off of the VPT cross long on Thursday, rebounded off of that. Now, structurally, the euro still looks very good, above the yearly opening price, the calendar quarterly opening, and of course that very important monthly opening price at 113.53. But the weekly opening price is contained it all week long, and if the dollar does significantly rise, then that would put pressure on the euro. But I will warn everybody that the euro has historically had a high correlation to gold contracts, so that may indirectly support the euro. I think we have a very interesting week ahead of us, but again, I would not bite on anything, guys, until at least Tuesday morning. or later on Monday night, the second open on Monday night in the Asian session. But the T-cross long, that is the line in the sand, 114.56. So an alternative strategy that I can provide you with is simply setting up a buy stop, a sell stop below 114.56. So if and when we break down below that, we have a sell order sitting there ready to go. And if the buy side remains intact, then we can pick it up off the long predicted, 115.06, or the T-cross long at 114.56. But I suspect that a sell stop below the T-cross long would be a reasonable play here, guys. But this is where most people don't have those levels. They're not using VP software. They're not have different types of tools. So it's simply an alternative strategy that I'm happy to provide anybody watching. Now, the US Swiss franc, this one is going to be interesting. If the equity markets tank, this is how it works, guys. The dollar will not strengthen against the Swiss franc. If we get into a very severe risk-off environment, two currencies particularly will strengthen, the Swiss franc and the yen. So it is 100% dependent on what happens here next week between the US and Iran. So watch this one very closely, but I will point out, again, prior to this happening, the dollar is simply corrected higher back to the T-cross long, and then it is continually failed into that area. And to make it, to sweeten the pot, the monthly opening price is sitting right there also at 82.23. So we would have to clear this area if we were thinking about longs, but I believe that we will be in a risk-off environment at least the start of the week, and that's where you want to keep an eye on things. Pound dollar, again, last week talking about that I don't think it's going to be a great week for the pound, but we've had a significant move down. We have failed, and we're holding on the monthly opening price. But again, it's going to be a headline-driven trading week, guys. So make sure you have access to information, to everything that's going on, because it will make a difference. But for now, structurally, the pound is positive on the year, but I don't think the monthly opening price will hold here, at least in the first couple of days. Because again, on top of that, we're going into a period of known dollar strength the closer we get to the 30th of the month. So while the pound may recover on Monday or Tuesday, I think towards the end of the week, it struggles either way. The indicators in VP are very mixed here, but again, that T-cross long, that's 130. We're just going to say round it out to 135. We've got to stay below 135, and shorts are absolutely valid for at least a week and a half. Okay. Now, when we look at the dollar yen, once again, this is going to be headline driven. Right now, this was already picking up on dollar strength, but this could reverse very quickly. In a risk-off environment. The yen could strengthen, so be careful of that. Have a series of verified resistance highs that starts at 145.46 and a secondary verified resistance high at 146.28. I believe selling into these two levels is very reasonable. So again, but data dependent or headline news dependent. But either way, you may want to just avoid this pair next week altogether until such time as the real price shows itself. Now, the US Canadian pair, it is an oil-driven currency, the Canadian dollar. But again, what I've discussed with the oil contracts, I think it'll be very interesting. Again, in my respectful opinion only, the easiest way to cut terrorism off is to keep those oil prices down. So I believe that's what they will try and do next week, is you will maybe see an initial spike and then a sell-off. Absolutely, I could be wrong here, but I've seen this movie before, guys, all right? So right now, the pair is pressuring the upside. The other thing the Canadian dollar has a very high correlation to is risk. If risk is on, the Canadian, the Aussie, and the Kiwi are doing just fine. But if we go into a risk-off environment and things escalate between the US and Iran, the Canadian dollar, the Aussie dollar, and the Kiwi are not currencies we would think about buying here. Not immediately anyway. So there is the possibility that the USCAD is going to break through that monthly opening price. That would set the T-cross long as our support level at 137.04 and an additional support at 136.86, the long predicted. I would say there is a 60% chance, 60% probability that it does break through here initially out of the gate on Monday. And the same is going to apply with the Aussie and the Kiwi. You can see that they're under pressure last week, long before this, the strike ever occurred on Saturday, or yeah, I think it was Saturday night that it occurred. So right now, much like the US CAD pressuring the upside on that pair, this one's pressuring the downside. So the monthly opening, 64.41, the indicators in VP are saying this level is going to be breached. And I would respectfully agree with that, but I would also say that we would be looking for buying opportunities on this. Once we get past here, we'll move towards 62, 62.47, 61.89. As long as we're above these two levels, the pair remains bullish. I believe what's happening with Iran and the U.S. will likely pass, but I'm not convinced of that. I'm hoping that they will come to an agreement, but we've been at it with Iran for a long, long time, guys, and I don't think they're going to settle anything. I think this is going to escalate. So that tells me that the monthly level is likely to be breached. And when we look at the New Zealand US dollar, it's the same trade, guys, and it's already breached the monthly opening price. So the VP indicators, once again, very much ahead of this on Wednesday's trading when the MA diff cross went down. I don't like to show things after the fact. I'm only pointing out that I believe that somebody was aware of these events were coming, and they were already moving, or they were already concerned enough to stop moving out of longs on the Aussie US, moving out of longs on the New Zealand US dollar. But the one that shocked me and made me really say, oh, there's something funny here, is oil prices going higher and the US Canadian pair screaming higher. That was a warning sign that something is wrong in the markets. And that, by definition, guys, is intermarket technical analysis. So be very cautious to start the week, and in my respectful opinion, I would really wait until Tuesday morning and let the smoke clear. So with that said, this is the Vantage Point AI Market Outlook for the week of June the 23rd, 2020.